Hiring a spouse through a business can be a very smart tax strategy, and a lot of other times it could turn into a compliance disaster. It's important on the front end to know why you're doing it and make sure you set it up and implement it correctly. There's a lot of misinformation out there about this topic, be it independent reading, blogs, that very credible TikTok influencer where you see a little snippet. But hey, today we're going to clear the air on when it makes sense to put your spouse on payroll, and more importantly, really, when it doesn't make sense. Hello, everyone. My name is Andrew D'Amico. I'm a CPA partner here at Ledgerly, alongside Mike Abrahamian. We're tax strategists. We help our clients save on tax dollars and help them build a roadmap for generational wealth. If you like the sound of those things, please subscribe to this channel. But enough about me. Let's get to the whiteboard. You can see I have a couple statements up there. It's not right when you hear people talking about putting a spouse on payroll. Sometimes you'll hear, oh, it's good because it's going to pay into their Social Security. It's going to give them a benefit. Or, oh, you can shift some income between you and your spouse. Well, I'm going to spend the first part of this video actually discrediting these things. It's absolute nonsense. More often than not, I will say, at least. So number one, helps with their Social Security. High level, if you know how Social Security works, and let's not even get into the fact of, oh, hey, is it even going to be there when I retire? I'm not covering that today. But high level, it's a calculation that they'll do based on your highest earning years, and they'll calculate a benefit for you upon your retirement. You start claiming Social Security, and again, based on your highest performing years, you get 1,000 a month, 2,000 a month, 3,000 a month, whatever the dollar amount is. It again depends on those wages you earn throughout your career, your adult life, as well as when you start taking those benefits, be it at early retirement, the full retirement age, depends on the timing. So those are some of the factors to consider. But the reason this doesn't make sense for our business owner clients is the existence of what's called the spousal benefit rule. And I'm going to walk through this in an example in a second. But let's take an avatar of, we have a husband and a wife. Husband, business owner, he's been the breadwinner all their lives. He's been the one providing for the family, out there working, making most of the money, whereas the wife either worked part-time or worked ad hoc, or even was just a stay-at-home mother, raised the kids, and never really had a working career where she wasn't generating a lot of money. In that avatar sequence, it's not going to make sense to put her on payroll through husband's business because of the existence of this 50% spousal benefit. Now I'm going to paint this picture with some numbers. So you got to understand, if we got our husband, he's got a business. Let's say he's got an S Corp. He himself is already paying a W-2, right? And there's payroll taxes associated with that, the Social Security. Well, let's understand the taxes, right? Based on a W-2 wage, you're going to be subject to FICA. And we talk about all the time, we do not like FICA. It is that 15.3% that's assessed on wages, and it is made up of 2.9%, 2.9% in Medicare, and then 12.4% in Social Security. That is our topic of discussion here. So if we say, hey, let's go and put spouse on payroll, you must understand that, hey, if we were going to give her a $30K salary, she's going to be subject to that Social Security as well as the Medicare in terms of, hey, is the benefit there for the amount that we're going to pay into Social Security versus her benefit on the back end? It's going to cost, yes, the 15.3%, but purposes of the video, Social Security tax, and fact check me, but I calculated the number before, it's going to be about $3,700 in Social Security tax every year. Let's say we run this for 10 years. That's a cumulative Social Security tax of $3,700. Okay, over 10 years. So people are thinking like, hey, that's going to pay off in the back end. That's going to help us in retirement. Well, again, let's work back with our avatar. Husband's the hardworking spouse or makes all the money. Let's say they get into retirement. Husbands start taking Social Security, and his benefit is, the husband, let's say he's eligible for $3,000 in Social Security per month. What about the wife? Remember, she's never really worked that much. Her income has been relatively low. Let's conservative estimate on the higher end. Let's say on her highest working years alone, let's say she's eligible for, $1,400 per month in Social Security. Again, that's based off of her wages alone. The wife's wages. Her individual calculated benefit is $1,400. But if we were just going to rely solely on the spousal benefit, that's going to be 50%. So she would have been eligible for $1,500 a month. Spousal benefit. So as you can see, this is obviously higher than the $1,400. Now you might be thinking, well, wouldn't this just get layered on and she's actually eligible for $2,900? No, it doesn't work that way. It's either based on her individual calculated benefit or the spousal benefit. It's not both. It's either or. So in this scenario, we could have avoided this entirely. The 30K wages, the 37 in Social Security tax, not to mention there was going to be that 2.9 that's layered onto this as well over 10 years just to generate that benefit. We could have avoided that $37,000 plus entirely and just relied on the spousal benefit. And I understand this is not cut and dry between every individual, every couple, every business owner. Each situation is going to differ. If you want to get an idea, go to ssa.gov. You can actually calculate your estimated Social Security benefit. Maybe I could put a link up on the screen. My editor knows how to do that. That's cue for you, my friend. ssa.gov. You can calculate your estimated benefit. You can calculate the estimated spousal benefit. And then you work back to this and then reconsider if, hey, does it make sense to put spouse on or not? And again, maybe, hey, if they already have a day job and they are contributing significantly to the household, then okay, maybe we come back. But generally, just put your spouse on payroll strictly for Social Security benefits is not going to be worth the extra payroll taxes you got to pay into it. That's the number one headline or source of misinformation when it comes to putting a spouse on payroll that we really do not like. We generally do not sign off. That's number one. Now, number two, you can save on your income tax by shifting income between you and your spouse. Well, I hope you know why that doesn't work, but let's draw this up. Let's go baby steps here. Again, we got our business, we got an S Corp, and if you're familiar, we know our, let's say, husband. Let's give some names. You know what? Screw it. Andrew. Yep, we're going to go with me. Give some names. I am the 100% owner of this S corporation. I pay myself a W-2 and anything net comes in on a K-1. Let's say this business nets 500K in net income and I give myself 100K salary, which reduces my net income. And then what am I left with? 400. Well, where does that go? Oh, that's going to flow in on my K-1. Now, where do these forms go? Oh, wait, that's right. They get reported down here on my 1040. And question for you, where do you pay federal income tax? S corporation is a flow-through entity. Single member LLC, it's on your 1040. The tax is assessed. It's all assessed down here. Tax. All gets assessed down there. So if we're talking about shifting income between you and a spouse, well, where does your spouse pay their federal income tax? Care to venture a guess? Yeah, you betcha. If you're gonna file jointly, this is gonna be husband and spouse right down here. So what benefit do I have in, let's say wife, we add into this picture, we want to pay her 50K. We don't give her ownership percentage. We're just kicking out another W-2 and this is 50K. Well, that comes off my net income as well. And now instead of 400 on my K1, I have 350. 100, 350, and 50. It's still 500. You're still getting $500,000 in income flowing down to your joint 1040 and paying income tax down there. There's no shifting income here because you guys are in the same bracket because you're filing the same tax return. So when I hear that one, that kind of grinds my gears. I mean, I get it. Some people might marry and file as separate. Honestly, genuinely, generally, rarely see that. So for the vast majority of you business owners out there, please, if you hear somebody say that, smack them in the face for me. Don't do that, actually. I can get in trouble. I'm not condoning violence. Point being, it's all going to get taxed down here. Doesn't really matter the composition. And back to my payroll piece, the payroll tax piece, the FICA, I'm not subject to FICA on my K1. This does have FICA. This does have FICA. 15.3%. So I just signed up for an extra 15.3% on another $50,000. It's about $7,600 that I just signed up to pay for when I didn't have to pay it over here. So be careful with the information you see out there. So those are the two primary reasons, or really arguments, that I would not support for putting a spouse on payroll. Now, when would you put a spouse on payroll? It really comes down to a few items. Really, I could really boil it down to two. So let's boil this down and make it very simple. So why then, Andrew, you might be asking, which I don't blame you. Actual work. Is your spouse genuinely involved in your business? Are they helping with operations? Are they handling the phones, serving in an admin function? Are they in your social media? Are they helping you with social media? There's a variety, hundreds of jobs that they could be doing to help you in your business. If that's the case, and they're putting in genuine effort, hey, maybe you can justify wages very simply. So if there's actual work involved, and then refer to our other videos on 1099 versus W-2, kind of that same discussion. If they're performing work in the business, they look like an employee, act like an employee, smell like an employee, put them on payroll. Because when it comes to employees in your business, the IRS is looking at a few tests. Again, refer back to our other videos. So if there is genuine work, put them on payroll because that is the law. That is the IRS requirement, not mine. It's not mine. And then planning opportunities. What kind of planning opportunities? Well, there's two that we love. Retirement, i.e. solo 401k, when the shoe fits. Not always, but that's probably our number one favorite. And then medical expenses, thinking HRA or a health reimbursement arrangement. First one, retirement. You could probably guess, hey, how can we put more monies into a retirement bucket for us? So, hey, maybe we don't have to rely on Social Security so much. And hey, we can put more monies away. We can self-direct it. We can earn higher returns. We can build our portfolio, our retirement funds ourselves. That's one opportunity. Another planning opportunity is when we get payroll in the mix. To compensate our spouse, offer them a health reimbursement arrangement. We're paying them for justified wages, and then they're turning around, taking advantage of the HRA and paying for not only a spouse, but your medical expenses, right? Because you're married, probably gonna have the same health insurance coverages, share the same dependents who are ultimately the medical costs are going to come down to you too. Why don't we get a write-off for our medical bills? That's an incredible piece. That's an incredible strategy. But again, shoes got to fit, facts and circumstances got to be there. I'm going to tackle those two in separate videos because I could spend hours talking on those alone. But that's a high level overview of what to look at when you're considering putting your spouse on payroll in your business. It makes sense when the work is real, you do it right by paying them reasonably, and hey, we're going to unlock some planning opportunities that are going to benefit us in the long run. But please don't just take my words from it from this video. This is just introductory. If you want to consider this further, please get in touch with us. Book a call and we can tackle these planning opportunities as well as several others, which we're doing day in and day out in our practice. And we help business owners decide if this makes sense. We help them structure it clearly. And sometimes even more importantly, advise them when it doesn't make sense to do it at all. So before you pull the trigger, talk to a trusted advisor. If you like this video, please leave us a like, subscribe to the channel, and we'll catch you on the next video for some more tax strategies.